Good evening. Tonight I'll be presenting the Dodd-Frank Act, the fate of Fannie Mae and Freddie Mac. The Dodd-Frank Act was passed to promote the financial stability of the United States financial system, ending too big to fail and also ending taxpayer bailouts and also to protect the consumers from abusive financial services and practices. President Barack Obama remarks reminds us of the damaging effects of an economic downturn, which resembled the chaos that occurred during the Great Depression, where 8 million people had lost their jobs, businesses were forced to close their doors, and millions of people saw their retirement savings and home values decline dramatically. The creation of Fannie Mae and Freddie Mac occurred under Franklin D. Roosevelt, who believed many Americans were ill-housed and set out a new plan to stimulate the economy by making housing more affordable, encouraging more borrowing that would create the necessary capital to stimulate home building and creating more jobs. In 1932, Congress passed the Federal Home Loan Bank Act, which created Fannie Mae and a number of other federal agencies, which were directed to do the following, which was to provide refinancing options to prevent foreclosures, protect lenders with mortgage insurance, offer long-term fixed-rate mortgages, and create a secondary market to provide liquidity while stimulating participation for new home buyers. The creation of Ginnie Mae and Freddie Mac helped shape the secondary mortgage market. Freddie Mac was created in order to help thrift savings banks reduce interest rate risk, stimulate housing production, and expand the secondary market. Freddie Mac issued the first mortgage-backed security, and the two GSEs were now able to purchase uninsured mortgages under this new act. The primary reason for the passage of the Wall Street Reform and Consumer Protection Act came as a result of a breakdown in our financial system. The number of failures in the banking industry sharply increased during 2006 and 2013. The FDIC reported a total of 490 bank failures during this period, of which 460 occurred in 2008. This occurred as a result of lowering the underwriting standards, providing alternative loans that were considered more risky, such as Alt-A and subprime mortgages. The largest cost to the taxpayers, according to the Congressional Budget Office, resulted from the bailout of Fannie Mae and Freddie Mac, which cost taxpayers $248 billion dollars, and another $100 billion dollars was needed to preserve the two GSE while under conservatorship. The financial problems of Too Big to Fail were happening many years before the crisis, but it appeared that no one really took the time to pay attention. The tremors of an impending economic catastrophe were felt many years before the crisis, as the first warning sign appeared in the late 1990s, where First American Mortgage Company named FAMCO, a subprime mortgage lending company, filed for bankruptcy. New anti-predatory lending laws were enacted to protect consumers, but Congress decided to repeal the Glass-Steagall Act, a law that created a firewall between investment banks and commercial banks that was built to protect depositors' money from speculative activities. Paul Weston also said that the repeal of the Glass-Steagall Act would enable the creation of financial conglomerates, which would be too big to fail. Another issue during the time was the creative financing that was occurring. Payment option arms, interest only payments, negative amortization, and no income, no asset loans were some of the things that were offered to home, my, home buyers. Another problem that occurred during this time was the introduction of new financial instruments like derivatives, credit default swaps, and collateral debt obligations. A warning to Congress was made by John Hopeful in 2003, who explained the havoc that could occur because of the use of these exotic financial instruments like derivatives. And he said, "It is the welfare of the people which is paramount and not the maintenance of the speculative financial system." And I believe you can't create opportunity by taking unnecessary risk, advocating for deregulation, and later asking for a bailout. John Huffle had talked about derivatives bubble and the illusion that it created these financial instruments, and there was a lack of emphasis on market discipline during this time. Why did Fannie and Freddie fail? During the Financial Crisis Inquiry Commission, the testimony of CEO Daniel Mudd revealed that the company became motivated by the fear of being left behind. Countrywide, Citigroup, Lehman Brothers, and other companies in the mortgage and CDO business created their own securitization department to package Alt-A and subprime mortgages, thus creating unnecessary risk. Fannie Mae and Freddie Mac could no longer compete and sustain its presence in the mortgage industry, as its market share was reduced from 50% to 30%. It appeared that there was a competition, a conflict of interest, a government mandate versus Wall Street. This poor judgment and lack of leadership led to the demise of Fannie Mae and Freddie Mac. Thomas Lund provided an interesting perspective on the future of the company, and he mentioned that you either stay the course by maintaining credit discipline, protect the quality of its books, preserve the capital, and voice its concerns about other players in the mortgage market. This would have led to lower volumes and less revenue, and a continued decline in market share and lower earnings. Or meet the market, which would have resulted in an increase in riskier products. As the CEO once said, if you're not relevant, you're unprofitable and you're not servicing the mission. And there was danger to profitability. I'm speaking more long term than any given quarter or in any given year. Also, during the Financial Crisis Inquiry Commission, there was a revelation that did occur. They knew what they were doing, ignoring the warning signs in 2004. The company's chief risk officer told the CEO to stop purchasing loans with no income or no assets as soon as possible. What did Fannie Mae do? They fired him and carried on. Their failure was deeply rooted in a culture of arrogance and greed. The company's opposition to legislation for so long was a major mistake. The boards focused on maximizing shareholder profitability. The biggest failing was the legislative framework, especially the capital rules. The GSE structure allowed them to be so politically strong that they resisted the very legislation that might have saved them. Should we eliminate Fannie Mae and Freddie Mac? It's a great question. Some of the pros and cons I've outlined here is that it does increase affordable housing, maintain stability in the residential market, and increasing liquidity, and lowers interest rates so that banks can actually loan money to those that are wanting a new home. Some of the issues is that, well, it creates systemic risk and it's too powerful and it might deviate once again. Dodd-Frank's impact on Fannie Mae and Freddie Mac and the future of the housing industry is a question that a lot of people would like answered. Dodd-Frank Act left the issue with Fannie Mae and Freddie Mac unresolved. The Dodd-Frank Act goes to great lengths to regulate every single facet of the financial system, including many things that had nothing to do with the financial crisis. The single biggest contributor to the collapse of the financial system went unaddressed. The GSEs continues as wards of the state, underwriting virtually all of the mortgages in the United States. Fannie Mae and Freddie Mac and Ginnie Mae account for 97% of the mortgage-backed securities issuance in the United States. In conclusion, there are a number of proposals about what to do with Freddie Mac and Fannie Mae, and I believe leadership within the company failed many Americans. Its business model and ability to compete in the housing market is possible if we continue to maintain market discipline and not take unnecessary risk. I believe that reinstating its GSE status is the best option to providing affordable housing for many Americans. While the Dodd-Frank Act does not go far enough, I believe the law was intended to stabilize everything other than Fannie and Freddie, who are now making a profit and will one day rise again.